We're looking for a target here around 3,700, and then we're looking around 4,100. And so we've hit those targets, and now gold is in this kind of parabolic phase where who knows where the top is. Play that move. If you hit your target, you can exit, lock in the gains, wait for the next one. So for example, wherever gold tops out, say it shoots up here to 5,000, it's probably going to have some type of big correction. And then after it does that correction and it starts to turn up, you can get back in. But this correction will eliminate a lot of the risk. It's going to stabilize the price, get rid of those who are going to sell. And then as it starts to turn up, then you could have that second leg, which technically could take it all the way up to like 8,000 or 9,000, depending on where the top is. So there's lots of potential in gold.
The gold has already reached key targets around $3,700 and $4,100 and is now entering a parabolic phase. Once gold peaks, possibly near $5,000, it will likely undergo a major correction to remove short-term speculators and stabilize prices. Bank of America has raised its target to about $5,000, or higher, by 2026, while also warning of a possible correction along the way. According to the World Gold Council, gold broke above the $4,000 milestone in October 2025, and the pace of the rally has been very aggressive. Some technical analysis sites argue that the breakout is consistent with entering a third historic bull phase, projecting potential upside towards $6,000 to $8,000 or beyond if the parabolic momentum continues. After this consolidation, a new upward leg could emerge, potentially driving gold as high as in the next phase of the bull market. Chris Vermeulen, a seasoned market analyst, trader, and founder of the Technical Traders, explains that while the last quarter often brings a holiday rally, current market behavior shows gold entering a parabolic, late-stage move similar to 2007, when precious metals surged before a major top. Massive inflows and record volume indicate widespread FOMO, making this a risky time to buy, as the rally could soon exhaust. He warns that when momentum fades, gold could face a sharp correction, especially if panic hits the stock market, since in major sell-offs, even safe haven assets like gold are liquidated. Chris believes though gold might continue rising short-term, a significant pullback of 20 to 30% could follow, creating a better re-entry point later. Like this video and subscribe to stay ahead of the curve. We greatly appreciate your feedback, so please share your thoughts in the comments section below.
Right, it's the last quarter, it's the holiday rally, whatever you want to call it. Seasonality-wise, it does tend to go up. Seasonality is not something you want to bet your money on. I mean, this is an average price, right? So for example, really since May to October, seasonality wise, the stock market's out of favor. This year, it's got nothing but up. So you got to take it with a grain of salt, but we do know that October is usually volatile. It's big rallies, big sell-offs. It's usually a turning point. And at this point, it looks like it's more so a topping kind of happening at a point where the market is trying to top and stall out. But you're right. We'll have to see how it shakes out. The key is to be a long-term successful trader. It's not about trying to identify tops and bottoms and pick turning points. It's about knowing when a trend has ended, when to get out and protect your capital. And then when a new trend starts, being able to identify that and get into it and take advantage of the trend, whether it's up or down. And that's the biggest problem is a lot of people are trying to pick tops or they're trying to pick bottoms or when the trend reverses. And it's really difficult. It really is. You just have to let the market turn a corner and then start to move in that direction in a strong enough way that everything else you have to track it says, this is actually a new trend. This is not, a short-term blip. Based on the charts and based on what's happened in the past, this is the last leg. Now we're now in kind of, bubble territory. It's the crowded play. We're in what I think these are here, right? These final big spikes in gold where, it just shoots straight up. Because right now, if we were to overlay, which I don't have it set up here, but if we were to go back to 2007, just as the stock market was starting to peak out and top out, gold shot higher to all-time highs, silver did, but we also saw platinum, palladium, and the miners all take off and have this huge outperformance, and volume picked up dramatically. And so that's what's happening right now. We've just had a month of all of those. Everything in the precious metals complex now has taken off, and it has massive volume, meaning people are piling in. It's the crowded play. Everybody's now chasing it higher. And so all of these things are, and last time this happened with all of them, we saw the market, it was just weeks away from a major significant top. So to me, this looks very parabolic. I'm scared of things that go straight up like this because when they reverse, it's usually pretty violent. And now we have all the signs that mass market participants are fleeing into the same trade at the same time, hence the parabolic move. And so to answer your question, I think this is the last leg. The question is, when does it run out of steam? Is it a week away? Is it a month away? Is it, 5,000, 6,000 for gold? Where is it for silver? I'm not sure, but I think jumping in here is definitely a gamble. You're buying a rocket ship that's about to run out of fuel and potentially reverse before it has some type of correction, just because from a technical standpoint, these are all the late money people, the FOMO moving into gold right now. Anybody who's been in the precious metal space, I mean, you've been in it for a long time. You're not buying up here. Right? You probably aren't or shouldn't be. I think, it's you should be deep in the money, not just putting in a new position because, hey, you're missing out, right? Yeah, I think we'll see something similar. I do think the stock market, even if the stock market does pull back, like in 2007, the stock market pulled back about 20%. Gold continued to rally like another 15 or so percent. So I think we can have that same scenario. I think no matter what the stock market does, I think that the wave of money moving into precious metals, if stocks go down, will actually increase the wave of money moving into gold because people are going to be moving out of stocks. They'll be like, where do I go? I'm going to gold. But eventually what happens is when the stock market runs out of momentum here, if we take a look at 2007, I'll just zoom in a little bit more. If we look at what happens, the stock market kind of puts in this major low through here. And as the stock market starts to kind of break down and starts to break these lows and people go, oh my gosh, like the bottom's breaking out, that fear will naturally start to pull gold. And we started to see this as the market started to break down from this previous low, gold also started to exit. And then of course, as it broke more so this low over here, we saw gold and stocks sell off together as a panic move. And that's, I think that'll happen again. I think we'll see gold pull back. Now, the stock market pulled back about 55% back in this time. Gold only pulled back 34. But when there is pure panic and like it's headline news, we tend to see everything move down together. So there will be some waves if we go into a recession here and the stock market crashes. Gold's going to get pulled down with it. There's margin calls. There's just, when people are really scared and they see all of their accounts losing money, they literally just call their broker or they log into their account and they just liquidate everything. They're like, I can't take it. I don't know what's going on. I don't know what I'm doing. I'm losing tons of money. So they sell everything. And that's why we see pretty much everything, including precious metals, go down during these waves of panic in the stock market. So this, I believe, will rhyme again in the future when the stock market starts to crash. There will be some waves where it's going to pull precious metals down. And the big question is how much will it pull it back? And I think it'll probably be 20 or 30%, potentially even more. So I do think it'll create an opportunity down the road to re-enter gold at some point as well.
Chris Vermeulen cautions that despite gold's strong rally, volatility remains high and a 20 to 35% pullback is very possible once the move exhausts. Chris warns against assuming gold will stay stable or betting solely on a collapse of fiat currencies, noting that markets often defy expectations. Central banks' heavy gold buying signals deeper problems brewing in the global financial system, as gold typically surges before crises emerge. Massive inflows into gold, silver, and mining ETFs show both institutional and retail investors piling in, a hallmark of a bubble phase. Historically, such parabolic runs end with sharp, sudden reversals, making it nearly impossible to time the top before prices collapse.
I mean, gold still has volatility. You can still very easily see gold pull back 20 or 35%, right? It happens over and over during crazy volatility times. So savings to me shouldn't have a lot of downside risk. And I get it. People want to move in and store it, but it is a wild ride still. If you're planning on it for being stable, after a move like this, you have to expect there's going to be a pretty big pullback. And the question is, do you want to sit through that? Are you comfortable with that? The reality is we don't know where gold can pan out. For all we know, gold could correct very big in a big way, right? The markets tend to do what we least expect. And that's why most people get caught off guard. They're like, oh, I'll just hold it. And then the market, like right now, people don't think gold's going to top. They're all saying it's, 8,000, 10,000 and beyond. They said the monetary policy is breaking down. which they have been saying that since I was 16 years old when I got into this, that the dollar is going to collapse. I've heard that for 25 years. I mean, so as much as the scenario looks better, like this time is different scenario, everybody's like, we're closer and all that. Every year in every scenario, we are closer, I think, to potentially the fiat currency breaking down. But it's, we still go through these ebbs and flows of gold's in favor and then it's not. And that's what I don't bet on a system breaking and collapsing. I follow price action, because the odds of a system breaking that hasn't broken, since the 70s, you're trying to pick a top in something changing worldwide. And the US is pretty resilient. They always find ways to do stuff to bounce back. And you're best to follow price, not bet on what you think is changing and some collapse. It definitely, I wouldn't say it changes, because I still follow price, but there's no doubt, obviously there's something big brewing under the surface, right? If those big central banks are buying it, they're buying it because they know stuff's about to break or stuff is broken, but they're, holding it up until it actually comes out and everything falls apart. So, and I think that's why we're seeing, gold take off, is we're seeing a lot of that. And it's a warning. There's no doubt there's a warning, something big and bad is brewing. And that's what's pretty much always happened with gold. Typically when gold outperforms everything else and shoots higher, it's just a matter of time that something big is about to break in a system, in the world, in a country, and it's going to wreak havoc across. So the higher gold goes up here, the bigger the problem I think we have. We just don't know what it is yet and when it's going to actually come to light. So gold is that beacon just saying, prepare. Yeah, I don't know. It's hard to say. I mean, when you look at the ETFs of gold and silver and platinum and palladium and mining stocks and the mining ETFs, there's huge volume going into them. And that is telling me the retail investors piling in. I've heard a lot of people say it's not retail buy. Excuse me. It's not retail buying. It's, institutions. It's, big banking systems. And yes, they are doing that for sure. But the stock market and the volume of all that stuff, I don't think we're seeing these countries buy up GDX ETF and the leveraged ETFs around all of this stuff, right? That's the general public. Those are retail traders. I mean, every time is different, but central banks buying is a huge warning sign that something big and bad is going to happen. And where is the top? I don't know. I mean, we just have to let these trends and these big rallies just continue to run until they fizzle out. The catch here is, when you look, Danny, at what happened to these in the past. This is the monthly chart of silver. When you look at it, silver rallied up 32%, and then it fell 35% the following month. This unfortunately, this is probably what's going to happen. If we go back in time and we look at the last one, it was the same type of thing, right? You get into these bubble phases, and price rallies 115%, and then it falls 73%, which to get back up there, you need to make almost 300% to get back to somebody who bought it during the bubble peak. So the problem here is, when something goes straight up and it goes parabolic, it's not like you can see the trend changing direction and get out near the top. It's going to collapse. Then you'll be like, okay, that was a reversal, and I am nowhere near getting out at the top. And so people trying to time a top here is really difficult, because you need a giant reversal bar in this type of case to say price is reversed. It's most likely not going to be like some slow rollover in price. You'd be like, oh, it's starting to break down, I think I'll lock in some profits. It's going to take the elevator straight down and get hammered. And you'll be like, damn it, I just gave back 20% of that silver move, or 30% this week. And so that's the problem, is when the reversals happen, it's fast, and you're like, it's difficult to find a top in this type of price action.
The analyst views the current gold rally as a late-stage, parabolic move fueled by fear and speculation. While short-term gains may continue, history suggests that such rapid advances often precede steep corrections. With central banks accumulating gold and global financial pressures mounting, the metal remains a key barometer of systemic stress. However, the analyst advises caution. Waiting for a correction could offer safer, more strategic entry points as markets transition toward the next phase of the bull cycle. If gold a sharp correction after this parabolic move, what technical signs would indicate the next major buying opportunity? How might central bank accumulation of gold reshape long-term price stability and investor sentiment in the next financial cycle? If you enjoy the content, please like this video, subscribe to the channel and press the bell icon for timely updates.